welcome to the How to CEO show. I'm your host, Murray Newlands. When you decided to become a CEO, the world changed. You can either crash and burn or you can build an amazing company. We're here to give you the skills and knowledge, advice, and the expertise to build an amazing company. So, in this show, we're going to be looking at what's happening with investment right now in March 2020 with the coronavirus happening. I'm getting asked from CEOs and investors what is happening in the field. I think more than any time, I'm getting different answers from different people. Right now, I would say there's a lot of caution in the market. People want to know what's happening with other investors. People want to know what they should be doing. So let me convey some of those conversations and really try and describe some of those things. So, if you think about investors who are private individuals who are investing in startups, angel investors, right now, many of them are feeling the burn as the stock market goes down. Their personal wealth is what they invest out of. They invest out of their personal wealth. They often the times they hold their money in stocks and bonds. They sell those stocks and bonds when they want to invest in startups. Those stocks and bonds portfolios are looking down. They are not feeling as wealthy. Also, if they sell those stocks and bonds, then they're not going to get a great price for them. And so the cost of investing in startups for those individuals has gone up. Many of them also have investments in properties. Those properties, they're looking at those over the next 12 months, they're expecting those property investments to go down. Also, given the potential fallout with unemployment, if they're renting those out, if they have retail investment, they have commercial investment, those investments are not going to give them the same kinds of returns that they've been looking at in the last few years. As shops go bust, as unemployment goes up, as default rentals rise. So what does that mean? Well, that means that angel funding is going to be harder to get. A lot of people are going to be a lot more cautious about doing angel investing at the moment, purely and simply. Funds. Well, it's going to be determined a lot about where the fund is. Until just recently, it's been a great time. The market's been up. There's been a lot of money available to invest in funds, and funds are sitting on a lot of money. What does that mean? Well, they have to either, at some point, they have to either invest the money or return the money. So those funds are going to be looking to invest that money. Now, if a fund has been going for a while, if they already have a lot of investments, they're going to want to save some of that money, a good portion of it, potentially to help current investments that potentially are going to be in trouble. They're also going to be looking a lot at what those investments, their portfolio investments, client bases are. For example, everyone knows now that, as I said, angel investors are going to cut back. Angel investors are also going to be looking at, are they going to have to support their existing investments? So making new investments is going to be hard for them. But what that means is startups are going to very quickly slow down how much money they're making. That means even big companies who sell to startups are going to have challenges. So even bigger investors, therefore, are going to be looking at what are the customer base of the portfolio companies and saying, what do we do with that? The other thing is, there's a new reality, I would say. The reality is that there are going to be more startups chasing less cash. What does that mean? That means probably valuations are going to come down. It's going to mean that companies who have cash in the bank are going to string that cash out, spend less, hire less people, probably more part-time people. So expect companies that have that cash to keep their going and push out raising around. So great companies that are planning ahead will start to push out the rounds they have. And some of those funds will look at keeping money for when those great companies pop and are looking to raise. There's also going to be great bargains in the market for investors. There are going to be great companies who all of a sudden are going to struggle to raise money. And yes, they're going to be able to raise money, but investors are going to start looking for those bargain companies. As I say, the investors are going to start really looking at, okay, what is your route to profitability? Given that things are going to become hard, who are your target customers? Are you really successful at doing them? Because knowing for investors, knowing that raising other money is going to be hard, they don't want to be putting their money into a company that is not profitable, is has a hard route to profitability, and maybe a hard route to fundraising. So once again, for investors, the idea of can you get to profitability and will you be profitable in the new environment, which is the environment which we're going to be in, are really important factors to look at. And therefore, for you as a CEO, one of the things that you need to be focusing on is how do you make your cash flow go as long as possible, knowing it could be hard? How are you going to find the investors that have already raised money which they have to deploy, and how are you going to get in front of them? And then how are you going to persuade them that in the new reality with high unemployment, with changes in the market, that your company has a successful route to profitability? I'm Murray Newlands. You are watching and hopefully listening to the How to CEO show. If you like this show, please subscribe either on YouTube or on Apple or Google or one of the other many platforms. Please share it with a friend. Please invite a friend to subscribe to the show. If you'd like to be on the show, we'd love to have you as a guest if you've got something great to share. I'm Murray Newlands. You're listening to the How to CEO show. I'll see you next time.